All right, testing 1, 2. Good morning, good evening, and good afternoon, everyone. Yes, we are live. We're going to do a fast little review video on S&P or futures trading. I'm going to give you an update on some of the things that are happening here at Day Trading Radio, the recent release of the short signal on the Rockbot on the Tradingview platform, and kind of catch us up. I haven't done any educational videos in a couple weeks, so I want this one to be a pretty good one, and we're going to kind of start off here, catching up and just saying, hey, everyone. We have a lot of new listeners, a lot of new viewers since the last time I put out a really good, long educational video, a couple of weeks now. And so I want to just kind of introduce myself. Right now we're looking at the Rockbot just triggered before. I'm sitting down. It's a Sunday evening, and the Rockbot just triggered with a 1-minute divergence signal. It's running the 1-minute buy divergence script that you have if you're a member of Day Trading Radio or you get it on Patreon. All right, and this is searching for a divergence. And you can see on this chart here how well that divergence is. And this is one of the first topics I want to kind of go over today, is how important it is to understand what we are hunting. And I say hunting, yes, I mean this is our job. This is our business, is to identify divergences and trade them. And they're very easy to spot. I would say probably the hardest thing to understand is to be there when they're happening, because they can happen at any time. As you can see, it is 8:33 p.m. And it is on a Sunday evening. So, but when you get these setups, you have to really be on top of it and take this. This is your money opportunity trades, So the market's not going to wait for you. You're going to have to know when the setups are. We try to get as many tools out there to kind of identify this. Like this would be actually a Voxer alert. And the Voxer alert is where I send out the alert on the phone. It's called the Futures Trade Alert Network. And that way, if there's any super signals or any divergences like this, I tend to put these out there. I just sat down here, so I didn't get this out. But the next one I will, if I'm going to be here into the evening. I will try my best to get that one out. I look back here and you can start to see what we look for. That low and that lower low and that higher low on the stochastic rotation. And you can see that area right here on this one, how well it played out here. Right there. Really, we call this a high level divergence, a high angle divergence there. And sometimes I'll let this thing trigger, I'll actually follow it up with a trailing. I'll manually follow this up with a trailing stop instead of let's see here like that right there. I'll just take it and I'll drag it up, and I'll manually push it up there. That way we kind of tighten that up. So that's what's going on here. I want to kind of go over some things on what we're looking for. Again, it's so important to. Let's start with that. Let's start with the criteria that we're looking for in the markets. I want to bring you over to another chart here. And again, this was a great divergence back here too. This low, this lower low, even though it gapped up, that's usually really good. I see this a lot. And I can mention it to some people. If we have a close on a Friday and then we gap down Sunday evening, but we make a divergence on that, that is a great divergence. You would think that's, how is it going to read that? But every time I see that, especially on the 14.3 being bigger than the 9.3 and possibly even the 44. But remember that one of the rules we have is that the 14.3 is steeper than the 9.3. It's actually a better divergence. And if it opens up from a Sunday to a Friday to a Sunday, and you have that gap up and turn back up, and you want to be in that. You want to be in that for a fast trade. All right, so there you go. Looks like we just took the profit. So we're going to jump over here, all right? We're going to jump over here now. Now, I just recently released the Super Signal Quad Sell strategy on the Tradingview. It's already out on the Ninja Trader, but I did get it on the Tradingview. It's uploaded now. The only thing I have to do is add everyone to it. And that's a big pain in the butt. So you have to bear with me. I want to get that done, and that's going to happen over the next couple of days. I got to take each of the people that if you are a member that receives the Rockbot scripts or the Tradingview scripts, that means any of the membership packages other than the basic one. The basic is $49.95. Anything above that receives all the bots, and you get the TradingView bots, you get the Ninja Trader bots. I call them bots, but the strategies, you can run them on there. And with the TradingView and the Ninja Trader, I gave out a form. In the form, you put in your username, your Day Trading Radio username, and then you put your TradingView username in. That way, I could cross-reference them. And again, to make sure you have a valid membership to get these. You also could get them if you're not a member of Day Trading Radio. You could get them over at Patreon, at the Patreon site. That's patreon.com/Day Trading Radio. And you get them all there, too. And that's really a bargain there. It's just $50 a month, and you get all the scripts. So here we have, and that's all. It's all good. I've been doing some back testing on it. I want to show you, also I want to show you one of the things I want to show you right now is how I am running this. Let's see if we can get it on the screen here. How am I running this? And again, I apologize if people are in the room and they're trying to get in touch with me. I do not have my chat room open. I got to bust through this video, not really get distracted too much. So I apologize if I'm not answering anybody's thing. Oh yeah, I see the coupons on the bottom. They're good until the end of today. This November 10th. So the 90% coupon. Take advantage of that. Expires tonight. Expires tonight on the 10th. I think the same thing with the DTR Apex, but the Apex coupon is always the same. DTR Apex, so whatever the best coupon discount it is, it gets applied to the DTR Apex coupon code. So that's a standing code. Always use that. The Bull and Ox changes depending on what it is, and I usually kind of give you that DTR 90. If it's a 90, it's a DTR 90. All right, now back onto that. Back onto the strategy here on the Ninja Trader. Excuse me, on the TradingView. So all right. So let's move this up here. I'm not going to go in. I kind of just put out a video before how to use it earlier today. Now this is running it on the, let's see, this is the 3-minute time frame. And I'm running it, let me see, extended hour trades, all right. Now I've been kind of, back testing a bit. I want to show you the parameters I'm running here. All right, let's move this over. Let's go to the parameters that I'm running. So we're going to go over here to where it says settings. And you're going to see something kind of interesting here. It says 0 here. Take profits 0. Take profits 1, 0. Take profits 2, 0. Take profits 2, lot 0. Stop loss 25. And again, trailing start ticks is 8. And trailing stop ticks is 8 with 3 contracts. And it's on a stop loss of ticks. All right. Stop loss of ticks. Now I have this, even though this is a divergence setup. When I just put it on ticks. I'll switch it back over. We'll test it on the Signal Marlowe also. And we'll also show you the safety net, also how well or what that does for the strategy. So basically, you get to put in whatever you want. Again, this is one strategy you can run, and what this is doing, this is not giving us any targets to the downside. There's again, profit target 1 is 0, profit target 1, how many you want to take off is 0, profit target 2 is 0, and how many you want to take off at profit target 2 is 0. Our lot is 5. That means we have 5 contracts, but we're not. So the only thing that's going to be playing out here is our stop loss and our trailing start ticks and our trailing stop. That means after it goes up 8 ticks, it's going to start its trailing stop, and it's going to follow it up by 8 ticks. It has no profit, so as long as that continues to follow it up and not get stopped out, then you'll make, that's how that'll work. Your original stop loss ticks is there at 25. That means if you start off and you don't get up above 8 ticks and it rolls over, your stop loss is at 25. Now remember, this is working off a divergent strategy. It's a really good one. It's actually on the short side, which I have my thoughts, I have my issues with short selling. I think it's much easier to go, these work much better on the long side, depending on what market and what type of market you're trading. If you're trading a very strong market, you don't want to be using short scripts as much as you want to use long scripts. But they do work, as you can see. So let's go back now to let's take a look at what the results are on the back testing here. It looks like. Let me move this over. All right, so 94 trades, 68% profitable, 2.5 average trade 27. But what's interesting, maximal drawdown 372. Now I don't know how many trades this is taking. It doesn't give me a I don't know how far back it goes here. But I want to show you the difference between ticks. Now, if we remember, our ticks are 25 ticks, but if we use the signal bar low, that's going to calculate the highest high in the pattern, and then it puts a stop one tick above that. So it could tighten up things a bit. So let's take a look at what it does. So its net profit is 2,600, 94 trades, and percent profitable is 68. Let's move it to stop. Let's move it to signal bar high now. Oh, big change. Whoa. Net profit 4,000, percent profitable 85%, profit factor 3, total trades 94. So now we actually have a trailing stop as our signal bar low, and it always works good with I feel very proud to be able to put that in my scripts and really come up with that and use that as in the way it should be used. The George Lane stochastic divergence here it's a very easy stop to be put in, a very easy way to calculate that. So I'm glad I'm able to add it to the formula here. One last thing we'll do is we'll put on our safety net. Now the safety net, I don't expect too much to happen with this, but it's always great. The safety net sometimes helps a bit. Let's take a look here. I want to click on the safety net. Let's see what it changes. 4,285. 4,200. Nothing really happening with the safety net. Now the safety net, if you're trending against a short and you get a little you get a rotation back, and I have to really show it. So I'm going to mark that safety net on right there, and then we're going to actually show you the chart and see if I could actually show you what that safety net does. You probably won't really see it too well because you got to really adjust your profits. So if your profits are coming in and you're not following down with a trailing stop, your profits will be taken off the first time that 9.3 gets under 80. So it's kind of a safety stop. So in case you get a short and this 9.3 is very strong and you don't want it to push back up on you, it'll easily take it off for you. Again, it's a great tool to have. Works just in conditions that are not great for your trading. If the market's very strong and you get a rotation here, but it never hits your stop, but because you're going to have that trailing stop is going to be the tightest thing. That's pretty tight trailing stop. So if we had a trailing stop in here, let me see if I could show that. Let's see where we were. If I could find that. Let's see. I wish I could make that smaller. Oh, I can a little. All right. So let's make our trailing. What I'm going to do here is I'm going to make this trailing stop a much bigger. Actually, let's lift this up here, starting trailing stop. See if we get. Actually, I like to change these as I watch the as I watch everything. All right. All right, watch when I increase my trailing stop here. So as I increase my trailing stop, it gives it time for that to go down. All right, it gives it time. So we're watching that price, see it go down, and now what happened is it said it hit its safety net. That means right when that got oversold, it automatically took it off. So that's now you see it says safety net because it didn't go back enough that the trailing stop, but it automatically takes off on the first rotation. Now it's actually it's still giving us good profits. Everything looks everything looks pretty good. And again, this is meant to to kind of experiment with this. If you don't have a safety net, you probably continue to take profits on that. 3,465. But in the beginning, he was putting an 8 down there, and that was pretty tight. And that was giving us a really good results here. So stop loss 25, everything 0, 8, 8. Signal bar low, engaged, no safety net. That seemed to be pretty good. And we could tighten up that trailing drawdown too, actually, by tightening up the stop loss. Well, actually, it's a signal bar low, so it don't even matter with that. My bad on that. But that's what's great about this. There we go. We could tighten that up by starting our trailing stop a little bit early. So our drawdown here is much better. Average trade is $50. I like this. And even if you tighten this up really good, let's see if there's any big changes here. 81%, 15. Yeah. God, look at that. Average, that's good. But again, run it, test it, see what you like on it. Same thing on the long side. The long is, this is on the NASDAQ, by the way. This is running on the NASDAQ. It seems to be killing it on the NASDAQ. And again, those numbers are real small. So you can adjust those numbers too. But when I see good results, sometimes you can put that on an auto trade and get those results. All right, so here we have signal bar short, signal bar short. All right, let's get rid of this. So now you can put them both up there. Again, they'll be in your indicator. You'll be in the invite only section of your indicators, invite only. Again, I still have to get everyone on board with the short. All right, I have to get everyone on board with this. Right now you have this, you have the super signal long. And you can see great trades on this too, 86%. I like this a lot. What's the parameters on this? Yeah, the parameters on this is 30, 40, 3. Again, you might want to look at this and copy that down. 8, 8, 13. Signal bar low. That's on the MNQ. Well, that's on the MNQ long. That's the long, the buy divergence. And again, the same thing. You could increase these trailing stops, maybe even capture a lot more of your profit zones. Remember, this is identification. This identifies the areas for you. You're going to really have to adjust your parameters based on what the market wants to give you. The market's giving you nice moves and stuff, then you want to spread that. I like the idea of letting these things take the entries, and then we manage them based off of our analysis of the overall markets at the time the markets are trading. So these things are running good. I got a couple more that we're going to release. I have the bull flag finished too. I just got to release it. And then we got some more coming. I have a real good one that's going to be, and again, you're getting all these with your membership. There's no extra fee or anything. So the next really good one here I have for you, it's a real good one. It's something I've been wanting to do for such a long time, is just do a pure divergence on the 44. It's our golden child. It has never failed. It does not fail. So I want to put one together for the not failed thing, the golden child. I don't know what I'm going to call it, but it's the 44. That's going to come next, probably by next week. And I'm looking forward to that. So let's just go back here and take a look at our markets now. Now, during the day, I got an email the other day saying, John, you're very distracted. You've been missing trades, and you seem very distracted. And I took that to heart, and I said, damn, yeah, it is. It's been tremendous. It's been crazy. It's been crazy since I've done that at the end podcast, and just having people just getting onto the site and making sure I'm answering everyone's questions and doing the coaching and stuff. It's just been overwhelming, and I do miss some stuff, and that's not what I want to do. I want to show you these setups. These are golden setups. So starting tomorrow, I want to try to be so focused on this, and kind of this is what we're going to do. I want to go back and kind of walk you through the trades, just a screen, just go. Let's walk back right now. And I want to point out the setups that we're going to point out during the day, meaning this is a walkthrough of the markets and the trades you should be taking. A very simple thing. It's kind of repetitious. It means a lot to kind of go over this and see these all the time, because when I say there is money to be made, when you see this setup here, this is actually a nice falling wedge pattern with a divergence. Look at the size of this divergence here. This is absolutely fantastic. I mean, this is where you pull out your ES contracts and stuff. And this is where I'm doing a video watching it happen. We did get it on the Rockbot channel and stuff, but this is where we have to be serious right here. This is where you have to be. If you miss this trade and you're out there and you miss it, then you're missing opportunities. You're missing great opportunities, So that is what we look for. A combination of the downward channel. I'm always looking for, these are better setups. Any type of channel like down. Every time I see something that forms just something like that, I'm always measuring channels, because when you have a downward channel, then we're looking for a pivot area. And the pivot area is going to happen when you have a low and a higher low above that 20. And it's either going to be a lower low, or it's going to be a closing price low. And when these closing the bodies, where these bodies close, or just at what we call double bottom low, or a closing price, or pretty much a relative close, so where the majority of the candles are at that same place, but the stochastics are pushing back up. So this was a nice channel. It was a nice divergence. And, looking back at it, that's what you want to see. You want to see these pivot areas. Now, if we look at the overall markets, we know what type of market we were trading in over the last week here. We had the Fed behind us. We had the election behind us, and it was very, very strong, super strong. So I prefer to go long on these days until the market kind of goes into a bear mode, because this does not anywhere show a bear mode, and very hard to take shorts in this condition. So I don't try to do that. And if we do get caught into that game, then we just, we have to read the tea leaves. The tea leaves are that 60-10 down here. If you're like seeing, all right, I see a short here. I see that little short here. Yeah, I do too. I see it pulling back a little. I see it quickly hit that 20 line there, which is our get out of jail free card. That's our safety net, right? That's the safety net. So if this is up here above 90, 85, 90, this is probably around 90. This goes to 20. Most likely this area, and it's holding around the 20, that's going to be the lowest you're going to find in this rotation. So it ends up being a bull flag here. So what happens is you turn into a little bull flag like that. This rotates down, this stays higher, and this pops. And that's the danger of taking these little divergences, and they don't play out too fast. But that's because you could read this in here. If you see that you're in an upward trending market, that should be a big no-no for you no matter what. You're not going to time the market. You're not going to get that perfect trade. Now, it's okay to trade this, but you have to take it off when you get that fast rotation. If you happen to get a decent divergence, and let's see here. Was that a divergence here? Yeah, it was and it turned back up on you. Well, this is very dangerous. Again, when you're up above this 80 line and you're chopping around and the market's been very up, you could get run over on these trades. This was a sell here. It actually pushed back to the 20, it rebounded right back up. I mean, it didn't give you much chance at all. That would have been a failure here. All right. But again, that's a short, and I'm not looking for shorts in this type of environment. So that's, there is a rule. There are rules. In an uptrending market, when this is up, if you see these shorts, you're going to take them off fast, especially if they take down to the 20. You're just going to get out. You might have 2 ticks. You might have no ticks. You might be down 2 ticks. Any case, you take it off, uptrending market, you get a divergence, you get your first rotation. You're not calling the top 9 times out of 10. You're not in this type of strength. So again, now when you start to identify the downward channel, that's when you really want to start looking to go to work. All right. These little pullbacks in a very strong trend are really good. So let's not pay attention to the short side. Let's pay attention to the little lip divergences on the buy side. And these lip divergences are little lows, combination of low, 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 higher low here in circle. I remember seeing this live. I called that out. That small little lip there plus the reversal candle. We go back out here. Decent pullback, little wedge. Tough one to call. I mean, you did have quad rotation, and it looks like there was kind of a closing price and a higher rotation here. I mean, that's something that you probably want to take. But I understand if you don't take it because it's kind of sloppy. But you'll start to see these lips. You'll start to identify the lips even better down the road. So we're concentrating on the longs here. We're not concentrating on the shorts. And we're looking for this. We're looking for relative lows. This is probably not something. This is borderline. I would not call that. Nothing. No. Here, this was a double bottom, high rotation divergence here. Very nice. Nice pullback channel. And nice move here. Everyone asks me, what point do you get in here? You get in as soon as you see the turn back up. Right when you see that. Lots of times it'll be accompanied by a reversal candle or a big green candle, an engulfing pattern or a piercing pattern, outside candle. But you want to get in there. If it's inside that channel, you're good because it's going to come outside the channel. If it's just outside the channel, you're probably good. Okay. Again, these are pivot areas. Every time we have that, pullback here, like something. This is what I like too. I don't know if I even called one here, but. I'm tracking it. Lots of times we'll get these channels and we'll get these quad rotations in the channels. Now, I don't usually send out and say to buy a random quad, but if you do have a quad and a perfect channel, lots of times that is a good level to buy because you're in the lower channel line. You have multiple time frames. This is a 9, 3, 5 minute time frames all lined up. Lots of times you will get those reactions. It's better to be in on something like this than to be in when the stochastics are overbought and going long. That's rule number one, Rule number one. Sometimes you're not going to get the lip divergences, or you're just waiting around. Here, this is after hour or just after hours last Thursday. You can see a little pullback, the little double bottom here, that lip here. That was actually a good lip. And I would trade that, even after hours, especially with the prop account, which you're not, you might get a little slippage here, but it's still worth to get a couple points on stuff like this. Again, it's very easy to see. Here's a lip here, low, low, lip, higher, low, 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 higher, low. Get a big pop. You see the lip, right when the lip starts to turn back up, you got to be on top of that. That's even harder to get in. Once it gets overbought, you should be taking profits. I mean, this is overnight. This is tough stuff. Right here, but you're starting to see those. I just wanted to show them that even the small divergences cause small moves. Big divergences are going to cause bigger moves. Here's a nice double bottom, kind of the same price, but a higher lip here, and a nice pop out of the channel. Small micro lip there. Nothing there. I was searching for them last week. You had one here, and again, what happened here? You got that pop out of here, but you got overbought quickly. These are reasons to take these things off. So even if you're in and you don't get the big move, you recognize that and you get out. You get out and say there'll be better setups. Maybe down here this is a better setup. Well, it's a quad rotation channel. John just said, if you have a quad rotation, downward channel, probably a good level to get in. You have a good kind of sneaky downward candles. Always paying attention to these big candles. You get a quad rotation, big candle, you have better shots at that. This was actually a nice divergence. Nice three. That's almost a running divergence there. It is a running divergence. It's high, 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 lower high, and even lower high. And went right into a lip divergence down here that you can barely see. So the setups are there. The setups are there. There's different type of setups. There's definitely better setups than others. And when you're in the trend, again, be careful on your shorts. Your shorts are very dangerous, and when the market is trending higher, when we're above the 200 period moving average, above the VWAP, those shorts are difficult, and that's going to be the first clue to that is when your 60-10 is heading up or it's embedded. We talk about embedded. That means the trend is intact. But what we're talking about it moving up, well, that means there's a new channel just starting. Here you had this pullback. You had a nice little quad rotation here, which broke us out, and now we have the new channel. So once you have that new channel and you see this going up, even if you get little divergences, most likely because the bigger trend's up, that this is only going to last until it hits the 80 line, and then we're going to start moving back up. 80 line, back up, 80 line, back up. So this is actually a good time to put in a short safety net, meaning it's automatically going to take profits on the rotation if it does hit the rotation there. If you happen to take a position, click on that safety net. All right. There wasn't a lot of really great setups last week. There was a few. When they come out, they're like multiple time frames. A 2350, nice pullback here, a nice low, lower low, higher low on the 9.3. A higher of the 9.3 is on the 14, and the 44 is also pretty good. And you could actually see the 50 was the 60-10 was looking pretty good too. Here's another quad rotation channel. Quad rotation channel is something we have to start paying attention to, it looks like. If we're inside of a channel and we get a quad rotation, that looks like it could be something to pay attention to. Downward channel, little quad rotation, a little lip rotation. This is actually on the 3-minute time frame too, so I want to just point that out. This is on the 1-minute time frame. We find a lot of great setups on the 3-minute time frame. A lot of great setups. Some of these are borderline, but the reality is, if you have if you look at both of these, and you can see that this one's really right on that right on the 20 line, 14.3. That's under the 20. That's a pretty decent little divergence there. It's way under that dotted line. You can see the dotted lines about there. Here, it's just on it. Same thing here. Once you see that dual divergence on the 9.3 and the 14.3, and you have that kind of horseshoe little level, most likely you're going to get something going. This is a closing price divergence, where sometimes that rogue candle comes down and kind of tries to cheat you out of, sneaks down and grabs something, then chops around here. But we start to see the momentum. Right when we see that momentum shift here, we get in, and that's what we want. This was, this was a textbook divergence right here. Nice channel, nice higher low, very easy to read. 11 o'clock, right on the VWAP. That's where you make your big money. Right there. That's where you make your big money. So that's what we're waiting for. That's what I send out the alerts for. Sometimes they're there. Sometimes you could actually take a look at that right here. This is kind of a very close to a closing price divergence. You can see the higher rotation here. Didn't go too much further. But you do see the relative moves on these. These little candles down here, that little spike down, you could see it right there. I remember seeing that. And that little pullback. So every time we get a pullback, we're looking at those relative lows Any type of pullback, we start to chop around and kind of put in that double bottom. We have that higher low. We're going. Pullback, starting to get that pop. Pullback, nothing here, nothing there. Pullback, nothing. Maybe this week is going to be down. We're going to see. Maybe the shorts are going to come in a little bit better. When the shorts do come in, that was a good short right there, right down to the 20. We actually traded that. I think that was election night, wasn't that? That was election night. I remember that. All right. Anyway, just kind of a fast review of what we're looking for during the day, and what I promised to get out to you and be less distracted. Less distracted. The NASDAQ, much cleaner because I haven't marked this up, but let's just go back randomly in time on the NASDAQ and say, boom, here we are. We're going to find ourselves some divergences here. Let's take a look. So you actually see, this pullback here. You can start to manage that 1, 2, 3, and it comes down here, and you can start to see us holding that and kind of holding a little higher there. Starting to kind of move back up. It's a tough one. You did have that flush there right after 12 o'clock going into 1 o'clock. You had a nice little divergence here. It did move up here a little bit more. Again, this is on the NASDAQ. A little lip there. This was a 5-minute here. You can actually see the 5-minute over here. That 60-10 held above that 20 line with this drop down. Also, it was looks like might have been a 44 here. Oh yeah, that was a 44. That's what I want to work on actually tonight. That was actually a good 44 right there. From this here to this here. And a bigger one back here. Nice 44. Never fails. Big moves on 44s. That's why the next script is going to be a 44. Yeah, this type of chop here, chop, 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 and you start to see those candles, but you start to see the momentum shift here on this. Kind of get a little dip, and then we get a little rip. And once you get that little rip and you get that higher low, you want to go in. You want to take that shot. You put your stop right at the lows here. You got to take that shot. Just looking at that, but you're concentrating on it. You want to concentrate on it. You want to get that, like watching this thing. Again, don't try not to go against the 60-10. The 60-10 is really, really embedded. Remember, our exits are going to be much more quicker. So even if you did take something here, for whatever reason, if you got a quad rotation decided here, once it got into that 80 level up here, we want to take that off. Downward channels underneath the 2200, any type of pop, we're popping. We're getting up to that 80 line, 80 line, 80 line, dropping, 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 dropping. All right, I think that's good enough for that. Anything else I was going to share with you today? I was going to do a stock watch list, but I want to really concentrate on just making sure we identify all these. Do a lot of trading this week. A lot of trading I'm looking for. All right, so one last thing for tomorrow. Again, tomorrow we go into beast mode when we're going to be identifying these. What we're going to be looking for, and what I want everyone to understand is to find these things, you have to know the environment that you're trading in. All right, and what we know that in divergences are usually big moves, and we call them pivots. Usually a divergence is going to give us a change of direction on the bigger time scale, even from a little pullback to a little pop. That was what was good about this divergence back here. Beautiful. That was what was great. This divergence right here, just great pivot areas. Fantastic areas of and that's when you get a nice pip. So we're going to identify and watch the trades tomorrow. When we have that pullback, we're going to focus on that. We're going to be watching the pullback, maybe watching, identifying the channel. And once it gets down into an area, we're going to be paying attention to and watching that stochastic for those little lip divergences and trying to catch those lip divergences. But even better, we're going to watch the quad rotation. So we're going to be looking for that divergence trade, but we're also going to be looking at that quad rotation trade. And I love when we kind of zoom out and you get the feel of like, wow, if we were in down here, there's such a much bigger move. We're in here, nice pullback. We have such a bigger move. We're in here, nice pullback, not such a bigger move. If we zoom out, we see how well those work. Even here too. You can see that. Very strong. So again, we're going to look for those channels, and we're going to see if we have the quad rotation inside of a channel. We might not have the divergence, but if we have a quad rotation inside of a channel, we might actually take those trades and be a little bit more aggressive on this. I think I'm going to do this week we're going to do 4 prop accounts. Each one, I'm going to do quad rotations on it. The one will be divergences. One I'll run a bot on. And I think we'll put all those maybe on the Rockbot channel so everyone can see them. I know sometimes I put them on my main screen. I keep one on my main screen, but I want to do a lot of active. Again, that Bullinox code, 90% off, good until midnight tonight. So if you do want to join on that, go right ahead, because I think we're going to be very focused this week. Very, very focused. I apologize if there's some emails out there that haven't gotten taken care of yet. I'm going to get to those right now. There is now kind of a one-day, 24-hour turnaround on the emails and kind of getting people set up on the bot and stuff, especially on the weekend, because I did, spend a lot of time with my family on the weekend. I didn't do anything on the off. I tend to do that because I can't get burnt out too much. So that's what we'll do. So Monday, we're actually trading tonight, but I want to get this out to you and just kind of get you updated for tomorrow and see what we could do. Again, watch for that quad rotation later tonight. Maybe we're here around 12 o'clock. We see a good pullback. We might actually take that. This was a quad rotation divergence. This is what we call a super signal. This is our best setup, and this is our holy grail, this setup right here. And it was inside of a wedge pattern, and it had a reversal candle, and it had a high rotation, and it was a quad rotation after divergence. It was the perfect setup right there. All right. So we're going to send this off. I'm going to start my watch list for stocks, which I haven't done in a couple weeks, and I need to do. All right. See everyone later.